So Andrew Cusack faces the angels in the den to raise £100,000 of finance for a restaurant and upper floors conversion into flats. This is down in Brighton and a fantastic little commercial to residential conversion project. Now, commercial to residential conversion is very much my bag, and I run a free training session on the subject. I've got a 90-minute class this Sunday. You can register for free at this link on the screen and in the description below. So what you're about to see is a clip from the hit TV show Property Elevator, which screens on Sky Channel 192. Andrew Cusack is pitching for financing. He's pitching for 100 grand's worth of finance from property angels on the show, who are John Howard, Helen Chorley, Paul Mahoney, Nicholas Wallwork, and myself, Ranjan Bhattacharya. So in this video, you're going to get to see the clip as it was shown on TV, interjected with me, giving you an extra little bit of commentary and analysis on the deal. So very shortly, we'll be filming series 3 of Property Elevator. And if you're inspired and want to come on the show and pitch for property funding for your property project, then I've got a link in the description below. Go there, register your details, and I'll let you know as soon as we start filming that series, and you can be pitching on the show as well. So let's dive straight into it as I hand you over now to the show's presenter, Elizabeth Walker.
Andrew, welcome to the show.
Thanks, Lizzie.
Are you excited to be here?
Very excited to be here today.
Good. Tell us a little bit about your pitch and what you're hoping from the angels today.
Today I'm looking to raise £100,000, which will be part of £200,000 that I'm looking to raise. The £100,000 will be coming from myself as well.
Yeah.
And this is for a development project in Brighton, which will be to purchase a freehold building and convert it into 6 leasehold units.
And are you wanting to partner with anyone in particular today, or are you just looking for an investment?
I'm just looking for an investment, hopefully one that will work with me again on future projects. And they're all great investors, so I would be happy to work with anyone.
Well, good luck.
Thank you.
I wish you all the best, and I will speak to you when you get out.
So next we've got Andrew. Andrew's a full-time property investor, developer, and he's a deal sourcer, I think. This deal he's bringing us is in Brighton. It's a commercial stroke residential, it will convert into 6 flats or 4 flats and 2 commercial units. In Brighton, you think it's London on Sea, don't you?
That's what they call it.
That's what they call it, is it? Yeah.
Certainly one of our more glamorous seaside resorts, much better than Blackpool.
And Paul doesn't know where it is.
I was there on the weekend.
Were you? Oh, I do.
yeah.
Well, it's the first place you've come outside London
Went
for
on
about a
a
month. Helen and Nicholas too far away, so this one's definitely for me. Shall we get Andrew in? Thank you very much for coming in today. We've had a look at the paperwork you've given us. Tell us a bit about yourself and then about the deal, and we'll take it from there.
So I've been a full-time property investor since February 2019. Prior to that, I had my own IT business, which I founded in 2007. And in my first 2 properties I bought in February 2019. They were 2 one-bedroom flats, which I turned into 2-bedroom flats and sold on to investors. I then went on and bought a 3-bed end of terrace freehold house, which I'm splitting into 2 leasehold flats. So I'm looking to grow further and do bigger and better deals.
And where do you live?
I live in Brighton.
You do?
I live, yeah, so all of my investment properties are in Brighton.
And
That's a nice start, a little bit of experience there, doing a few simple developments, and also lives in the area where the subject property is. That always helps.
tell us what you're bringing us today to invest into, please.
Okay, so it's this end of terrace commercial property with a 1-bedroom flat upstairs, and this plot of land on the side, which currently has this orangery. And we plan to turn the back of the existing commercial units into a 1-bedroom flat, and then build a double-storey extension on this side and have another commercial unit at the front and a flat at the back and a 2-bedroom flat upstairs.
So the property here is a mixed-use property. That you've got a restaurant on the ground floor, occupies quite a bit of space. You've got residential space above in form of apartments, roof space as well, and a little bit of land to the side. So there's plenty there to do something with.
You've got a commercial shop there at the moment as part of it. For me, I'd rather it all be residential. Is that possible? Something you can do, you think, on this or not?
But I think the existing shop will probably have to be maintained unless permitted development changes coming up will allow you to change all of it. However, I think
Now this deal, I mean, Andrew is a little bit before his time. I mean, this was filmed March 2020. And of course, now we are looking at permitted development rights, which allow conversion of restaurant space into residential use. At the time this was filmed, of course, this wasn't an option. So this is a deal before his time. So as a result, of course, when we were looking at this deal, if you wanted to convert the whole of a restaurant into residential use, you'd have to go through planning permission, which by no means is certain.
the returns from the commercial unit will be higher than if it was residential.
The only thing I would say, it just can affect sometimes the sale prices of the residential above it and to the side of it.
And in terms of
Well, that is true. Of course, residential units that you create above or behind commercial premises will sell for slightly less than if they weren't adjacent to commercial premises. That's just the way it is. Typically, I would allow for a discount of about 10% to what a similar flat would be if it wasn't adjacent to commercial. But as with everything, you work from your end values, your end GDVs, gross development values, and work your way backwards. So all it means is the raw material that you buy, you'll have to buy at slightly lesser price in order to make your end figures.
the length of the project.
Planning will be going in this month, and once planning is received, I expect it to be completed within 8 months.
And the build?
The build is within that eight-month period.
That's for everything?
That's for everything up until market and hopefully sell some of these units off plan. So the actual build should take about 5 months. And so I've allowed the 3-month period to actually engage in the work once we get the planning, and a 2-month period at the end to complete the sales.
Now, what I find with folks with an IT background, they're very good at project managing things because, well, obviously IT hinges on being a good project manager. You can see how he's got his time scales all planned out. But there is one crucial time scale that he's unable to provide any estimate for, and that is the time it will take to get planning permission. Planning permission is a pain in the posterior, quite frankly. You may be lucky, you might get it through in 8 weeks. It might take 8 months, it might take a number of years. And that is the problem with such projects that involve planning permission. If you haven't got the planning in place right now, you've got no idea when the end date is of the actual project.
Right.
I think the 2 months at the end is a bit ambitious. I always leave at least 6 months. And the reason for that is, yes, you sell 2 or 3 of them really well, but there's always 1 or 2 at the end. And the problem is the 1 or 2 at the end, I might leave 9 months to be fair, because the 1 or 2 at the end, that's your profit.
Yeah, exactly.
And it's always that last down one that's fallen through 3 times that you finally sell for less than you thought because you're just glad to get rid of it.
Okay, John is correct here, but there is a little workaround. I mean, of course, when you've developed some flats, let me start that bit again. Of course, John is right on this one. When you develop some flats to sell, it will take a lot longer than a couple of months to sell the number of units that Andrew is talking about. That is a given. But what typically happens is you'll sell about half of them, 2/3 of them, and that will usually be, yes, it's true that the last ones are your profit, but once you've got to, say, 60 or 65% sold, that should be enough to pay off your financing costs. Because what happens at the end of a development project that really bleeds you is if you can't repay back the bridging finance or the development finance that you've taken. If it takes too long to sell, you can't pay that off. That can pose a problem. But you need to work out how many units do you need to sell at the end of the day in order to simply pay off your investors or your debt. And then you can sit around a little bit and wait for the final profit to come in. That is one strategy that many developers play.
Yeah, but there's also the option to refinance and keep, because the return, the cash flow would be quite strong. Maybe not the return on the capital employed would be that strong, which is why I was looking to sell this. So
yeah, no,
it stacks up as a mix. And what I like about creating 6 leaseholds is you've got the balance maybe you'll keep 3
Yeah.
and sell 3.
Andrew's been very astute there, because what he's talked about is more on the bias of selling the flats if you got planning permission once they're built, as opposed to keeping them. And the reason he's suggesting that is because Brighton is a high value area, which means the rental yields are low. So what he's talking about in terms of return on capital employed, he's saying that for the value of the flats that he'll create, the rental return probably isn't enough of a return to make it justifiable to keep the flats. Hence, get out, sell them on, and move on to the next deal.
So you've got multiple exit options.
And could you say a little bit more about, so you're looking for an investor on a share of what you invest basis?
Yes.
So 50% for the cash funder, deal finder gets 50%, so 25% share of profits available for the investor.
That's right, yeah. So I'll be matching the £100,000 investment with the investor. And because I bought the deal today, that's the 50% for the sourcer.
So that's rather nice to see. When a developer wants to put skin in the game, that's a real sign of commitment. And here he's looking for half the money from the angels and half the money that he's going to put up himself. So you bought the thing. What indication have you had that you're likely to get planning, or is the plan to just sit it out and wait for the PD to be announced on A3 units and the like?
Well, of course, I mean, that is, the landscape is changing for that. But my planner, the local planning consultant, is very confident of getting the planning, because there's an existing structure there, and on the other side, another building has been built set back from the front of this, this parade. So there's obviously also potential with the new PD rights to put another level on top, if I could come to an arrangement with the other freeholders in this parade.
So have you...
So Andrew's bought the site. He hasn't actually got planning for it, which is a little bit of a risk, because at the time of shooting, there was no permitted development available on these types of units. That means it's full of uncertainty, quite frankly. In my comment on screen, I talked about, well, are you going to sit it out and wait for the new PD? The new PD I'm talking about is the PD, the permitted development for Class E buildings. Now, this restaurant, this A3 restaurant, has now been made Class E in terms of its usage class definition. And there is new PD rights coming in around about April time 2021, which will allow the residential conversion of any building that's in Class E. At the time this was shot, which is about a year earlier, there was no PD for converting those sort of buildings to residential use. At this time, you'd have had to go through full planning. If you want to find out more about what I'm talking about in terms of converting buildings to residential use under PD, I'm doing a webinar. I do it on Sundays, 90 minutes worth. Links in the on the screen and in the description below.
You bought it, or you haven't bought it?
We're going through now. So before the bridging company will come round and do the valuation,
Yep.
the existing owner needs to reinstate the dividing wall and remove the kitchen from the back.
Is that purchase subject to the planning?
No. I was confident enough that we would secure the planning, and
Awesome.
even if we could only do the conversion at the back of the existing shop and refurbish the upstairs flat.
It doesn't really stack up without the planning, obviously, but you know, it seems like it should go through. But aside from that, I think it's really well put together. Good job on the pack and the information about yourself. You know, just to compare you to others, you've done a really good job.
Oh, thank you, Paul.
I strangely agree with John. I think this is probably more.
That doesn't
one for
often
him.
happen, I can tell you.
He knows the area. I don't think it's necessarily for me, but I think you've done a good job, and it looks like a decent deal.
Appreciate it, thank you.
And this just partition wall, is that on the left red line, is that splitting what's the existing restaurant?
Exactly.
So are they retaining the left side?
They're retaining the left-hand side, yeah. I think what the problem that they had is because they extended, it made the footprint too big, and the business rates just made the business not viable anymore.
Right.
So that's why it's been shut for a long time, and the commercial units that I would put in would be 100% Zone A retail.
What about the...
Right, very, very astute, very, very switched on is Andrew Cusack there, hit the nail on the head. This is a common thing which happens with restaurants. You see, a lot of restaurant owners get a little bit overambitious, and then they start extending their floor space. The problem is, when you extend the floor space of a retail unit, guess what? You have more business rates to pay. And if you've got business rates to pay on a massive restaurant with plenty of covers, That just means that unless every table is full during all your trading hours, you've got a lot of dead weight that you're carrying in terms of business rates you're paying on non-utilised space. So you often find that independent restaurants sometimes are a little bit on the small size, but they're always full, because that allows them to optimise their cash flow and their expenses in terms of business rates. So the way to fix this problem is to simply make the retail space smaller. This will make the business rates liability less, and therefore it will make it more attractive to a potential tenant. Many times commercial properties are unlet simply because there's a problem, and it's about figuring out what that problem is and solving it.
Flat above, would they be living above that?
No, that's we're exchanging once they vacated. So that's one condition on the purchase, is we exchange once we've got vacant possession.
Okay, but the bit they're retaining has got some residential above it?
Complete when you've got vacant possession or exchange?
Well, exchange. They want to exchange and complete with vacant possession.
So is there a residential unit above the bit they're retaining?
Yes, there is, yeah.
Okay, and what are they doing with that?
They're keeping that. So they're just making a much smaller restaurant, and they're keeping their flats on the
Okay,
side.
they'll rent that flat out?
Yes, exactly.
So next door is going to be a restaurant?
Next door will be a restaurant, yes.
Existing restaurant, or it's going to be a smaller restaurant. And what do they do in there?
It's an Indian restaurant.
Indian restaurant.
Have you looked at how that might affect the values and the ability for finance?
Yes, I have, but because I know Brighton well, there's lots of Indian restaurants in Brighton.
Should go up if the food is good.
Not that you're biased.
Fair enough.
Like a great
The smell is obviously a concern.
We all like a good Indian.
Yeah, the smell is a concern. So that's why I've tried to reflect that in my
Okay.
GD value, and with the current COVID situation.
The thing with restaurants is they used to have a problem, I guess, in terms of smells and odours coming from the food. And that used to be a problem mainly because of the extraction systems that were in use. So if you've got particularly an older restaurant, they will have extraction systems that were designed to meet building regulations at the time those restaurants were built. If you're doing a restaurant today, the extraction systems that you have to put in to conform with modern building regulations are such that the odours are basically dealt with, and the noise from those extraction systems are also have to be sort of near silent. So a lot of people talk about odours from restaurants, but a lot of the time you tend to find that when people think about a smelly restaurant, they're thinking about a restaurant that has been in place for a long time and tends to have older extraction systems. If you do one today, it has to be conformant with modern day building regulations, which are completely different even to what they were 10 years ago.
As well.
So have we all had time to digest, excuse the pun, da-da-da-da,
Oh, John, don't do stand-up, mate.
the deal? Shall I go first? I like you very much.
Is that okay?
I'd love you to find me some deals in Brighton. Love Brighton. Totally put me off. A restaurant is a problem. An Indian restaurant, with all due respect, and I'd be going in there if I was in Brighton for a meal. It causes all sorts of problems on mortgages and funding and so on. It isn't for me.
So the position on mortgages with flats above restaurants is a little bit mixed. If you're keeping the whole property yourself as a long-term investment, then it's relatively straightforward to refinance the whole building on one freehold under a commercial mortgage. The issue comes where you want to separate the flats and sell them on to individual owner-occupiers. It's under those circumstances that the buyers of those flats have a slightly reduced choice of potential lenders who are willing to lend on those types of flats, and that can affect saleability. So that is an issue, but not so much if you are looking to keep the property for yourself.
I'll cut to the chase. For me, it's not one for me. As John says, it's a little bit far out of my comfort zone. I don't particularly like the plot, and that's the reasons I wouldn't be investing today. But thank you for coming.
Thank you.
Great pitch.
Thank you.
Helen?
On a numbers basis, the numbers look really good, but I do share the concerns that are already mentioned, so not for me on this occasion, but thank you very much. A great presentation.
Brilliant. Thank you.
Ranjan?
I will say that I think you got a good deal at a great time. And I personally think that you might want to wait it out for the permitted development rights to be announced, because I think you may find it a lot easier to get more than what you think you're going to get under the new PD than you will do under planning.
Yes.
Because as you know, Brighton can be a little bit problematic to do. Now, who is that fellow? Very astute, isn't he? He said all that in March 2020. Of course, now we know that PD is about to be announced for this sort of restaurant-type building for the easier conversion of residential use. And quite frankly, what that means is that instead of messing around with planning and spending months and God knows how long arguing the toss with the council of can you do it or not, you simply just put in a simple permitted development application and you get it, basically. So this project is interesting because Andrew's secured it, he's bought it. He's bought it at a time before many people knew about what is about to come. And I think now that more people will get to know about these sort of things that you can do under permitted development, the value of these sort of sites will go up. So I think what I'm saying there is very, very sound. Deal with.
They're at the Green Council there, aren't they? Green.
Because under PD you'll be able to go into the roof and all sorts.
Paul?
I think I summed up my thoughts earlier. You know, as I say, I think I like the way you presented it. I agree with John. I think you're likely to come up with some better deals, but it's not really one for me based upon what you've presented today.
Okay, Andrew, thank you very much for coming today, and I definitely want to keep in touch with you. And good luck with this deal and all future deals you do.
Okay, Andrew, how did it go?
It was interesting. My first ever experience pitching to investors. Unfortunately, they weren't going to invest in this deal, but I got some brilliant feedback.
Okay, so there's potential.
There's potential for funding from other deals, which won't be subject to planning. I think that was the main issue with this one,
Right.
was subject to planning.
Okay.
I've got other deals which would be a benefit from permitted development, so hopefully those ones will be more investable.
So restaurant and uppers are another type of building which will be open to permitted development opportunities. In other words, you can convert them to residential use without too much hassle. If you want to learn more, make sure you join me for my Sunday webinar where I'll tell you all about it in 90 minutes. property-workshop.com. See you guys soon.